Hello investors, welcome to Simpli Stocks. Like our previous video, I have brought 8 new businesses for you today that have announced excellent updates for the months of April to June, or basically the Q1 June quarter. Not all companies release updates, mainly financials, retail, jewelry, and a few FMCG and iron and steel businesses release updates mostly. So today as well, we will look at stocks from these sectors only. And now without any delay, let's quickly get started. So the first business that has posted a good update is Nykaa or FSN e-commerce ventures. Here you can read that in Q1, their consolidated GMV and NSV grew in the early 30s, or we can say Nykaa has reported a growth of 31 to 33%. And the sales growth has been close to 30s or around 27 to 29%. Now, what is interesting here is that you should focus on these words: is expected to accelerate. So this is an interesting thing that I will talk about more in detail later. And moreover, you will see that the NSV and sales growth in their beauty segment is in the early 20s or about 21 to 23%. And for the fashion business, the growth will be in the mid 50s, around 55% or so. Now, before moving forward, let us understand for a moment what gross merchandise value and net sales value actually mean. So gross merchandise value or GMV means the total amount of products customers bought from Nykaa or the value of goods ordered by them. And NSV tells us how much money came to Nykaa after any discounts, refunds or cancellations. I would say rather than the metric, you should focus more on the growth here, that the business is growing quite fast. Like you will see here that their business used to grow in the 22 to 23% range. Then that growth rate increased to around 24 to 25%. And now the management is saying that they will be growing their sales at almost 30% rate. So the impressive 28.5% sales growth that we saw in the March quarter will continue now. This business previously also used to grow at a healthy rate, but now that growth rate is accelerating and going forward, it will grow even faster. Or you can also understand it this way, that earlier a train was, let us say, running at a speed of 25 km per hour, and now its speed has actually increased to 30 km per hour. And this very change in the growth rate creates a lot of value actually. And because this is a platform business, it makes it even more attractive. Like I have been telling you this again and again through the examples of Cartrade, Blackbuck, and Aurum PropTech, that the special characteristic of platform businesses is that when their sales increase, the expenses remain largely the same. So the cost of running the website and app does not increase that much. Because of this, the profit growth that comes turns out to be very good. So even though Nykaa might seem overvalued to you at a PE of, let's say, 400 right now, you also have to understand one thing here, that right now the company is in its growth phase. And as more sales come from here, their margins will automatically keep getting better and better. So I'll say you do not need to panic by looking at 400 PE. You have to understand the special nature of the platform business here. And right now, the net profit or EPS figure is also quite small, which is why the PE ratio looks so inflated. And that is how ratios work, right? But you will see how quickly the PE will keep coming down. They have multiple different divisions and all of them are growing well. They all are doing well right now. And Nykaa's business is divided into mainly 3 to 4 segments. The biggest segment is beauty, where they sell skincare, healthcare, and makeup products online and also offline through their stores. And the second is the fashion segment, where they sell clothes, footwear, and accessories just like Myntra. And the third one is House of Nykaa, and that is quite interesting. In this segment, the company is building its own beauty and fashion brands and also acquiring new ones like K Beauty, Dot and Key, etc. Apart from this, through Nykaa Superstore, they also supply products to other retailers and salons. So overall, this business is good. And here on the right hand side, you will notice one thing, that the growth of India's beauty and personal care or BPC market itself, the growth itself is accelerating for the whole market. This segment has been growing at a CAGR of 9%, and going forward, it will be growing at 12% CAGR. Meaning the sector itself is doing quite well right now. due to rising incomes and awareness, people are making improvements in their lifestyles. They are spending more on beauty and personal care. For instance, the derma cosmetics segment that is booming a lot, which includes your brands like Minimalist or Cetaphil. Their guidance is that from here, over the next 4 to 5 years, their sales will become 2.5 to 3 times, and their target is to increase their EBITDA 4 to 5 times. And apart from this, the management also estimates that ROCE, which is currently 21%, will reach 40% plus. The company had an EBITDA of 700 crore rupees in FY26 with a 7% EBITDA margin. And you can see how bullish the management is. They are saying that this EBITDA margin will reach early to mid-teens or somewhere between 13 to 16%. From here, the EBITDA margins will essentially double. So overall, Nykaa is at a very interesting turning point, and I feel that all of you should start tracking this business. Now, moving forward, let us come to Poonawala Fincorp. Poonawala is a diversified NBFC, just like Bajaj Finance, and they have also been growing quite fast. Over here in this update, although they have given only their AUM, stating that by Q1 end, their AUM has reached 67,000 crore rupees. But let me tell you, it translates into an impressive 63% year-on-year growth. And this is much higher than their growth guidance of 35 to 40% for this entire year. And quarter on quarter as well, their AUM has increased by 11%. So overall, this is a good update. It faced a lot of problems back when the microfinance sector went through a downturn. But since then, Poonawala has been performing quite well, and a management change also took place. The new CEO, Mr. Arvind Kapil, has over 25 years of experience at HDFC Bank, and it seems that he has settled quite well into his role too, and he is growing the business quite well. And unlike earlier, when it was excessively MFI focused, Poonawala is now moving towards a mixed diversified approach, just like Bajaj Finance, where they are giving secured and unsecured loans. And within the unsecured segment, they are also adding multiple different categories, let us say like consumer loans. So overall, this is also a good business which you can track. Now, since we are talking about Poonawala, there is another player in the MFI space, iFinance. Let us have a look at it too. Now, its update has also come out good. And what is interesting in the case of iFinance is that like we see other microfinance players, be it Ujjivan, Credit Access Grameen or Arman, they have largely come out of the stress, and they are currently focusing on growing their book or growing their loan book or AUM. On the other hand, iFinance NPAs are still elevated, but they too have started working on their growth somewhat. In other in other MFI NBFCs, while you are playing the growth, like they have already given the recovery-led gains. Here, I can say that you are kind of one station ahead, meaning you can play the recovery too, and the value addition that will happen later from AUM growth, that is separate. Now, iFinance mainly gives secured and unsecured loans to MSMEs or small businesses in small towns and villages. Here, you will see the AUM has increased by 28% compared to the last year, which is within the guided range of 25 to 30%. And if we look at disbursements or basically new loans, they have grown by 22%. New borrowers added, all the new customers which I has acquired, there is a growth of 38% there as well. So overall, these are quite good numbers. And this is what I was telling you, like you will see here that it is still under a bit of stress. Here you will see its NPA numbers are still elevated, but the management has been saying that asset quality will be improving very rapidly in FY27. So like we saw a sharp rally in other microfinance companies because the underlying asset quality improved very quickly. In the case of iFinance, that is happening right now. So you can track this business once if you want, and then when the asset quality gets completely better or it improves completely, then we will get to see AUM growth from there. Now, a humble request, if you are liking this video so far, do give me a thumbs up. Also, you can subscribe to our channel Simpli Stocks, where we bring multiple such videos every week, because honestly, your likes and subscribes are our only motivation so that we keep bringing such high quality research to you for free. So do like this video, and yes, also subscribe to our channel. Anyway, let us get back to our businesses, and next let us look at jewelry businesses. So first is Kalyan. In Q1, all the months from April to June, Kalyan's overall sales growth has been quite good. You will see here that their sales increased by 38% compared to the last year, and same store sales growth was 28%. SSG basically means, how much sales have increased for the old stores compared to the last year. Or you can understand it this way that, sales which are coming from opening new stores, they are separate. But how the old stores are performing, that tells us what is the standing of business is in the market. Now, in their international business, which includes their stores in the Middle East, so they have managed to bring 35% top line growth despite the war. So that is also good. Similarly, talking about the store count, by the end of FY26 or basically March end, they had about 388 stores worldwide, and that included 320 of Kalyan and 68 of Candere. I mainly look at Kalyan stores when I am looking at Kalyan Jewellers, because Candere is not that big a business for them right now. Now, this quarter, they have opened about 12 new Kalyan stores. They had given a guidance of opening 95 to 100 stores in total for this year, including Kalyan stores and also a regional brand, new regional brand that they are planning to bring. So, compared to the guidance, pace is a bit slow right now on store expansion. That is one thing. So in the upcoming quarters, they will have to speed up their store expansion. But I have seen this happen many times. Companies usually are able to pick up the pace in the later quarters. That is not a big deal. Now, see, Kalyan's numbers are quite good, no doubt about that. But the market reacted negatively to their business update. I remember it fell by about 7 to 8% when the business update came out. Although since then, Kalyan has done quite well. Citi did a coverage on Kalyan, and the brokerage is eyeing 90% plus upside. So that has boosted the overall confidence of the market. But yes, initially the market reacted negatively to the update. And the reason for this is that Titan's update has been quite good. Titan has reported very good sales growth in Q1. Like here, you will see that Titan's jewelry business grew by 39%, and this is almost at par with Kalyan. Now, what many people don't understand is that market always looks at things comparatively. What I mean to say is that Titan is much larger in size compared to Kalyan. But despite that, it has reported equal growth to Kalyan, which is essentially making it look better. Yes, there is one more thing though that I saw in Titan's update, that their sales of gold coins have been higher. As gold has rallied so much, a lot of investment-led demand is now coming in. People are basically buying a lot of gold out of FOMO. So gold coins saw double-digit growth for Titan. That we will get to know in detail later in the con call, how much the contribution of coins was there in this 39% growth. And we can hope that Kalyan's bullion sales are lower, and that their margins will be better, because jewelers don't usually earn by selling coins and bars. They are basically low quality sales for them. But yes, if we look at it superficially and also keep the size in mind, overall these numbers are better than Kalyan's. So that is there. Now, what is my opinion on this? So I always look at longevity in a business. Like Titan has certainly reported a good update, but Titan will probably be able to grow faster for maybe 1 or 2 quarters, or at most half a year or so. But because Kalyan is smaller in size, if we look at the long term, Kalyan's CAGR growth will turn out to be higher only. So from that perspective, I don't have any issue with Kalyan. Kalyan's valuation has already been attractive, for a very long time, and even now it is attractive only. So you can look into this business. Now, moving forward, let us look at PN Gadgil's numbers as well. So Gadgil has also reported quite good numbers overall. You will see that their sales grew by 41% compared to the last year. Last year also in Q1, they had the B2B gold business. This was a low margin business in which they used to do gold refining. So they have been gradually reducing this, as that segment was present last year, but it is not there this year. So last year's base was large. Otherwise, if you look at the retail sales, they have grown by 56% compared to the last year, which is higher than the consolidated growth of 41%. In this, the SSG or same store sales growth, which I explained to you through Kalyan, stood at 46%. Apart from this time management focused less on gold coins and bars. So the contribution of bullion sales in their business remained lower at 22%. Otherwise, in Q4, this figure was close to 40%. You would remember, like last quarter, sales growth definitely looked very good, but in reality, those were low margin sales. And at that time, the market also reacted quite negatively. So perhaps the management is learning from its mistake. So therefore, I expect to see good margins this time. But overall, yes, this is a pretty good update. However, because Gadiel has created so many problems so many times, I am personally more inclined towards, or let's say more focused on Kalyan and Sky Gold now. And one more thing that management shared in their update is that stores that they are opening outside their home states, like in UP and all, they have shown better stud ratios than their stores in Maharashtra and Goa. So this shows us that in the new geographies that are being added, their sales of diamond and studded jewelry are higher. So all in all, the stud ratio should keep improving from here, and margins will also keep getting better over time. Now moving forward, as for the seventh business, Ujjivan among small finance banks has given a pretty decent update. You will see that their total deposits increased by 25% compared to the last year, and a growth of 29% was seen in the loan book. And a significant contribution in this growth has come from gold, housing, and vehicle loans. This, if you remember, I told you in the previous update as well that overall the gold lending segment, it is doing quite well, and it is seeing quite a good growth and tailwinds right now. And Ujjivan now is focusing more on secured loans. Like over here, you will see that the vehicle segment has seen very good growth of 85%, and housing grew by 41%. So overall, it is a good update from Ujjivan, and the growth which you are seeing here in the gross loan book is pretty much the same for their disbursements as well, or the new loans that they are giving. So therefore, we can skip talking about it. And overall, their asset quality numbers have also been good. I was seeing that. And now here briefly, I want to talk about one more thing that is more important than all this asset quality and all, because many people, many times people ask me whether Ujjivan is good or Utkarsh is good, or which one Arman is better. So my view is that I do not look at Ujjivan as a microfinance lender. So Ujjivan is on the path of becoming a universal bank. Like some time back, they also had filed application which was rejected by RBI because their loan book is not that diversified yet. But yes, you will see that they have been putting a lot of emphasis on growing their secured portion. Here you will see that their secured book has gone from 45.5% to 50% plus in 1 year. So if you want to play the MFI space, we can say that you should focus on other businesses like Utkarsh or Arman. Or if you want a growing emerging bank, then you can look at Ujjivan from that perspective, because understanding this difference is important. If you want to play the microfinance cycle, then Ujjivan is not the ideal bet for you. Now, finally, let us look at iron and steel businesses. So just like last time also, the update from Lloyd's Metals and Energy is also quite good. Lloyd's Metals has been delivering good volumes since its capex went live. You will see here that iron ore production grew by 53%, and DRI, or direct reduced iron, grew by a massive 131%. And for pellets, Lloyd's first plant is running at full capacity of 4 million tons. On top of that, the second plant for pellets that came up recently, here a production of 1.7 million tons out of total 4 million tons capacity was recorded. I had started covering this business 3 to 4 months ago, and it has done quite well since then. Now, since we are discussing about Lloyds, let's quickly look at JTL and Sambhav Steel too. So I was expecting actually better volumes from them, but their update has not been good so much. Like you will see here that JTL's volumes grew by just 18%, whereas their guidance for FY27 itself was 30%. Apart from that, I found Sambhav's volumes to be weak as well. Higher margin value-added products like GP coils and pipes saw growth of definitely 49%, and then there was growth of 56% in the stainless steel pipes division. But there is a decline of nearly 50% in intermediate products, although that is a thing that intermediate products get used elsewhere. But there is just 12.5% growth in the main structural pipes and tube segment. And if we look on a consolidated basis, there is a growth of just 16%. So their con calls definitely are going to be important for us. because that will let us know what is the industry outlook right now. Because I was reading that the prices of TMT bars, so they have been falling because of unseasonal rains in some parts of the India. So that has affected the construction activity. Therefore, I am personally being a bit cautious, because we will need to know, in how the near-term demand and pricing is for pipes and tubes. So that we will get to know in the con call. Now, at the end, if you enjoyed this video, please make sure to like it. Along with that, you can also subscribe to our channel, Simply Stocks, because see, the earnings season has just started. So in the coming days, I'll be bringing commentary on many good businesses for you. So don't forget to subscribe. With that, you will keep getting timely updates on all my future videos. With this, I'll see you in the next video. Happy investing.